It is I once again, the non-oracle, the human being who talks about stuff. So I hope you all had a happy Christmas, a Merry Christmas, a Happy Hanukkah, all that good stuff. Also, happy belated Festivus. Forgot to make much ado about that this year. Right? That's usually on. That's celebrated on the 23rd of December, which is a hilarious, quote unquote holiday, right? That was created in the Seinfeld TV series as part of the ongoing, storyline between George's father, Mr. Costanza, and that character Kramer. George Costanza had this, or George's father had this, invented a holiday called Festivus. Right? The holiday, and setting up the pole. They don't have a tree; they have a pole with no ornaments because tinsel bothers him. And then they have the airing of grievances, where they all say what they hate about each other, and then the strength tests where they do nonsense like wrestle next to the dining table. A bunch of ridiculous things happen. Anyway, so a very funny, silly tradition was born. Festivus, the holiday for the rest, or the festival for the rest, or whatever it is, for the rest of us. Festivus for the rest of us. So happy Festivus, belated. And happy Merry Christmas and Happy Hanukkah to the billions of people who celebrate Christmas and the millions who celebrate Hanukkah. May all your holidays be happy and good. And I just wish nothing but good for everybody. And unfortunately, there are too many people who aren't experiencing good, and that's why I wish for good always. So why am I talking in such a way? And well, you may have noticed that there's a lot of talk in the crypto sphere on YouTube and on Twitter especially, but also on Facebook and other places where people talk about crypto, about there's a bull run that's going to start, and prices are going to go woo to the moon, and they're going to be something else, right? 2025 is going to be, that's the year, man. That's the year, right? And then 4 years after that, that's going to be the year too. But this is the big one, because if you don't get in now, you're going to miss it, kind of thing. Well, here's the thing that they're not telling you, right? I don't know why. Well, they are, but they're not addressing it very well.
Hey.
Hi. Some amazing dogs I just walked by. They're all sweet. I know them. So wait, by the way, farmlands. Farmlands. That's where I am. I'm right there. No, I'm here. I'm here. But yeah, trees, farms, and a canal with some water. It's just rainwater at the moment. It does fill up in the wintertime a little bit. But at the moment, it's mostly filled up with just like an inch of rain or 2 inches of rain in some places. In most places, it's still dry or soggy, but not. You can't see water reflecting, right? There isn't an accumulated amount of water. It's just soggy. But it looks like it might be started to be getting. Yeah, okay. Well, let's see how far the water goes. Normally, it gets pretty dry eventually. Anyway, yeah, but farmland you can see here. So yes, I am in a place in northern Israel where there's farms. And again, this goes back to the crypto market. Why Why is it that we are constantly getting distractions from all the crypto jimmies and the YouTube jimmies talking about, oh, the bull run's going to start. This is the big one. You better get in now. You're going to miss it. This is life-changing, generational wealth. You probably heard me talk many times on this channel, if you've watched my channel for a while, about how there's no such thing as generational wealth for most people. Even if you make it, okay, say you make $50 million, guess what? $50 million is not generational wealth. You know why? If you're super lucky, your kids will have it after you're gone, but their kids probably won't. That's not generational wealth. When people say generational wealth, they mean wealth that lasts multiple generations, where your children and their children and their children and their children and their children and so on and so forth will never have to work again if you manage the money correctly, because you set up funds for the family, even as it grows and diversifies. Brothers have children, sisters have children, brothers and sisters have children, then those become cousins, and then the cousins first degree separation, cousins second degree separation, but it doesn't matter. They're still part of the family tree. How can you preserve wealth across the generations, across all the members of the family? Well, normally you can't, okay? Normally after 2 generations is gone, even if you make 100 million. Statistically, it's gone, okay? Why? Because the first generation, they'll usually be able to keep some or most of it, because they'll be so afraid to touch anything you did that they're just going to do everything they can to preserve it without actually learning what you did to make it. And they're just going to be so focused on not losing it that they're actually going to lose a bunch of it, because they're going to make mistakes along the way, like everybody does. And instead of having the skills to fix those mistakes and make it grow, they're just going to lose. But if they're smart enough or cautious enough, they won't lose all of it, and they'll be able to leave something for their children, but it won't be massive, and their children probably won't be even wealthy. They might be rich, but they won't be wealthy. And they will probably just be such goof-offs, being like, oh yeah, my grandpa, invented the bottle cap. Right? And so that kid's worth he's still got 20 million in his bank, and he thinks he's all that. Listen, 20 million is a lot of money. It's life-changing money. And if you're smart, you can make a fortune with it. But if you just grew up spoiled and you never had any skills and you just think that you can just live on that forever, well, maybe, but that means you're not going to leave anything behind, right? So that means that your kids are going to grow up with nothing, or not nothing, but nothing compared to you. And they're going to be like everybody else, which is fine. So what I'm saying is, statistically, again, more than 95% of people who make, quote unquote, a lot of money lose it all within 2 generations. Like their family loses it for them. Their grandkids will lose it all for them. Which isn't to say don't love your grandkids. In fact, the opposite. Love them so much that you make sure that you teach them the skills, and that you put in place systems and processes to make sure that they learn those skills, even if, God forbid, something happens to you. Okay, that if you're fortunate enough to have massive fortunes, by the way, that's where the water seems to end. Or maybe it keeps going under those grasses a little bit. And then I guess, so who knows? Maybe the rain has started to fill up the canal a little bit. So we should see normally a couple of feet of water in this canal within another month, normally. It lasts for about a month or 2. And then it goes away. Like by March, April, it kind of starts drying up and it's gone. By April, it's usually gone completely, or May, definitely. Anyway, it's a very temporary rain-based canal. What's nice about it is it does attract ducks and things, and the ducks are cute, so why not? So yeah, generational wealth. Honestly, unless you can actually make hundreds of millions of dollars, you're not creating generational wealth. 100 won't do it, I'm telling you. Your kids will lose some by accident, trying to not lose any, and your grandkids will lose the rest. And if by some miracle it gets to your great grandkids and they haven't figured out what your grandkids did wrong, it will definitely be gone after that generation. Statistically, I'm just talking statistics. Sure, there are outliers that beat the statistics. I understand that. But most people do not beat the statistics, is the point. Anyway, I'll show the end of the water here. Anyway, yeah, it ends around here. Ends right around there. Now, does it continue afterwards? After about 5 feet? Oh, it does. It continues. Okay. And then it comes out, goes on that little bridge, and continues to the other side. But like I said, it gets filled up normally. A couple feet of water or something. We'll see if that happens again this year. Hopefully it does. If not, that would not be great. Environment needs water, right? Farmland needs water, and it's nice when they get the free kind that falls from the skies, rather than just the kind that they have to, pay to pump, which also fell from the skies, obviously, but was collected, filtered, and went through pipes first. But yeah, when it just rains very nicely, then you don't obviously have to run your irrigation because you're getting free irrigation from the heavens. So yeah, the Bitcoin and crypto bull run that everybody's talking about, it's going to happen. It's going to happen. Going to go to the moon. You're going to see Bitcoin at $250,000, at $500,000, at $1 million. You're going to see XRP at whatever it is, $20, $40, $100, $1,000. And even Litecoin, you can see Litecoin at $500, $1,000, $10,000. All these things. Solana, whoa, Solana's going to go easily to $1,000, $5,000, $20,000, right? That's what everybody's saying, right? Well, let's just put it this way. The bull run already started way back in 2009 when Bitcoin went live. Why do I say that? Well, the U.S. literally was in a massive recession at the end of 2008 when Bitcoin was created, right, when the white paper was published. By 2009, when it launched in January 2009, the market was already beginning to bounce, even though the American economy was in full-on recession mode. And that's exactly when you want to be building things, and that's exactly what Bitcoin did, is it launched during the time of rebuilding and regrowing. And it's never really gone down. I mean, yes, you've had massive pullbacks, 80, 90%, whatever, but it's never really gone down in the big arc, right? It hasn't had a big dump or anything like that. So that's why the past 16 years have seen, returns of like 14, 15 billion%, like crazy, insane returns. All right, from 0 to over 100K. More importantly, right, the most recent, if you want to break it down and say, well, there's these cycles, there's not really these cycles. Okay, but let's just pretend somehow mythically they last 4 years. It's not mythical. It's mathematical. Look at what's happening on the higher time frames with the VEPs, and you'll see exactly why it tends to move in such periods of time. And it's not exactly 4 years. Let's be clear. Also, the halvings are not exactly to the date every 4 years. And it changes and will continue to change over time. There's already the predictive known change delta formula to know how much it will change in all likelihood over the coming halvings. That doesn't mean it's always going to be accurate, and that will continue to change. That's the beauty of math. We can calculate these things. We can estimate more accurately as time goes by. But let's just say that your predictive 4-year cycle thing that you hear everybody talking about on all these silly crypto channels is correct. Okay? Let's just say. Then, it's a piece of sand over there. Okay, some kind of a big piece of, not sand, like gravel or something. What is that? Yeah, gravel. Okay. Let's say that 4-year cycle is in theory correct. So what does that mean to you as an investor or a trader? It means nothing, right? Why does it mean nothing? Well, it means nothing because when you come right down to it, right, that is not how you trade. You don't trade Sorry, buddy. You don't trade long-term time frames on volatile assets, right? You trade low time frame volatility on volatile assets like Bitcoin, Litecoin, Solana, etc. Why? Well, because they're volatile. So if you're trading volatile assets, you got to keep in mind they're going to be volatile, yes. And on top of that, they're going to fluctuate because that's what volatility does, right? You will have fluctuations of the returns. The returns will constantly be oscillating around the mean of returns. As the returns oscillate around the mean of returns, guess what happens? The price action does what? Correct. It follows the mean of returns. As it follows the mean of returns, guess what happens? Because the mean of returns is going up and down constantly. What happens to the price action when it follows the mean of returns back and forth around, but when it follows the returns back and forth around the mean of returns? The price action goes up and down and sideways, but mostly up and down. So that is why you don't trade high time frame volatility. It's why you trade low time frame volatility. And if you look at this supposed bull cycle that's been happening since the beginning of this 4-year cycle, well, it's been going on since January 1st, 2023. That's when things started pumping again after 2022 was basically a down year. And really, most of 2021, after the initial pump that went up in like March to the high of like 69 or whatever, 65, whatever the price was, and then it dumped out to like, I forget what, like 38 or something like that, or 40, somewhere in that area, 48. It lost about, half or a third. And then it climbed back up slowly to like 69K or something like that. Never quite hit 70 in most markets. So the ATH was recorded generically as like 69 something. In November of 2021, some alts had a continuation of that little run until like January of 2022. But generally speaking, there was dumpage after November of 2021, and the price fell for about a year from November 2021 at the high until the lows of November 2022, after the, which happened to coincide with the timing of when FTX blew up, like fell apart because of all the reasons that did, right? with Sam Bankman-Fried and all that stuff, getting busted for all the shady things he and his crew were doing. And so that was the low, November 2021. It kept riding along relatively sideways until the end of the year. And then what happened? Well, what happened very clearly in January of 2023, literally on the 1st of January, I remember like it was yesterday, for many reasons. Unfortunately, not good ones because of real world stuff that happened, which is quite devastating. But, you know, we live and have to deal with stuff. Yeah, it started running up on New Year's Day like crazy, like from 15K to 16 or 17K, which remember, $1,000 doesn't seem a lot when you're moving in the price range of $100,000. But when you're down at 15K, $1,000 is a significant percentage, right? It's like 8% or whatever, 7% in a day, which is very nice. And then it just kept running up and running up and running up. I'm sure it had down days along the way, but it had a lot of up days from January. Made some very nice movements. Made 2023 a very profitable year for a lot of traders. That was, I mean, December of 2022, November, December of 2022, that was the time to buy like crazy, right? Because those were the relative lows of this current 4-year cycle, if you want to call it that. You get Solana for $8. I mean, I don't care how crappy Solana is right now. If you bought it at 8, you're not complaining when it's at $150, $200, $250 or more. Right? You can get Litecoin for a pittance, and you're not complaining when it's over $100 now or in that area. You get, again, Bitcoin for 15 grand. Now it's at 100, grand more or less. Even if it's slightly under right this moment while you're watching the video. Right? It's in that area, above 90 and under 120, right? Well, guess what? That's why we don't, if you're a trader, it's different than being an investor. If you're an investor, you buy, you stack, yay. And if you have not massive fortunes to invest, then you don't do lump sum investing, you do DCA. And then, frankly, even Michael Saylor does DCA, right? And even his company, MicroStrategy, does DCA. They just bought 5,000 Bitcoin like a few days ago. And they bought 15,000 the day before that, or whatever, a few days before that. They bought like more than 120,000 Bitcoin in like the last month. It's crazy. When Bitcoin was already running up into its new all-time high territory above 70K. So they just buy whenever they can. Which is not even like DCA. It's just like acquire. Kind of makes you think why they didn't just buy a whole lot more when they started buying, because whatever. But I'm glad they didn't, because then they'd already own way more, and most people would not be able to get even anything close to what they're buying now. And Bitcoin was not made for rich people, right? It was made to help people escape the trap of the fiat system. But of course, rich people and wealthy people were going to catch on to that, and we're going to get control of it. That was always going to happen. And I've been telling people that forever, as have other people. There's no, I'm not saying I'm the only one who ever told you that rich people. No. People who understand this have been saying for years, if you're a regular retail investor, get your Bitcoin ASAP if you're into it. Beware, if you want some, you better get it fast, because the wealthy are going to own it all as quickly as possible. And as soon as the drop, the pin drops, and the right rich people find out about this stuff and realize, oh, there isn't a lot left, and we better get this before there isn't any left. Well, guess what's going to happen? What's going to happen is exactly what happened, right? What's going to happen is the wealthy are going to own it. Well, guess how much? Guess what percentage of all the Bitcoin the wealthy already own. Okay. Do you know? 90. Did you get that? 91%. Right? The Bitcoin that's 1,000 or more Bitcoin. Did you get that? 91%. Guess what? Another 4%, bringing the total up to 95%. Another 4% is owned by wallets with 100 or more Bitcoins. Meaning, in total, 95% of all the Bitcoins are owned by wallets with 100 or more Bitcoins in them. Because if you have 1,000, obviously you have more than 100. 95% of all the Bitcoins that there can ever be are already owned by whales. There's no, oh, it might be different situation. No. And there's only like 5% left of the Bitcoin to mine, right? Guess how much the retail owns of the Bitcoin that there can ever be? Retail, meaning people, even though it's a crazy number to say, but it's in them, which is still, if you have 99 Bitcoins, you're doing fine. But if you have 99 Bitcoins, you're not considered a whale. Or at least that wallet isn't, right? If you have multiple wallets with like 99 Bitcoins in each of them, then your wallets are not considered whale wallets, even though you might be a significant whale, right? You might have 1,000 wallets with no more than 50 Bitcoins in each one of them, just like Satoshi did. Technically, Satoshi does not have any whale wallets. Satoshi doesn't have any wallets with 1,000 or more, or even 100 or more Bitcoin in them, as far as we know. All right? For the majority of his wallets, they're 50 Bitcoins or less. Why less? Well, they're 50 because he just would, for every block he would mine, he would create a new wallet. Less because sometimes he would send people some Bitcoins. And rarely, if ever, was he stacking Bitcoins in any particular wallet. Now, are there some wallets of Satoshis that have more than just Satoshi wallets? So literally, the only wallets, pretty much, that Satoshi ever had that have more than 100 Bitcoins are wallets where people sent him Bitcoins. Him, her, it, they, it doesn't matter. Satoshi don't need your Bitcoins, bro. You're not some special hero because you sent the inventor of Bitcoin your Bitcoins. What you are is financially an idiot. I don't mean that to insult you. I'm just saying financially, you're behaving like an idiot. Because the guy that invented the technology and the protocol and the network and the currency, he doesn't need you to send him what he already has 4% of the total capacity of, right? He's got 1 million of them, probably more, right? That's between 1 and 1.1 million Bitcoins that Satoshi mined out of the 21 million. Why would he need your Bitcoins? He's got 4% of the world's global total max supply. Sending him your Bitcoins is just a dumb attempt at flexing that doesn't work. Honestly, don't do it. Unless you just love to lose money for some reason. Would you send him 100 Bitcoins right now? There are people who did. As a thank you. Why are you sending the guy who invented the protocol his own thing? Would you send the guy who invented the golf ball a bag full of golf balls? Does he need your bag full of golf? You know, he invented them, right? He's the one selling them to everyone else. Would you send the Federal Reserve money? Like a bag full of your money just for no reason? It's crazy. Okay? But people do it. Anyway, the point is the bull run. The bull run is just buy pressure. But even if you want to accept that it's called a bull run, and even if you want to accept that there's such a thing as a super cycle, which there isn't, it's just buy pressure. And then sell pressure at the end of it when it drops off. We are already 2 years into it, right? It started January 1st. We're literally the 26th of December now, 2024. It started January 1st, 2023. That's in 6 days. That'll be 2 years to the day that this bull run has been happening. That's quite long. Can it go up another? Can it keep running for another year? Sure, why not? Does it have to? Absolutely not. There's no guarantee. I'm not saying that to FUD you out of crypto at all. What I'm telling you is don't try trading on exchanges with leverage based on high time frame information. That is a recipe for trading disaster. When people say, oh, well, look at this projection, and this analyst said that Bitcoin's going to have a $200,000 or $20,000 drop in Q1 of 2025. Dude, Q1 of 2025 is 90 days. Do you know how many trades you can run in 90 days? If you were like a serious trader, you actually trade based on what some analyst forecasts. I swear, if that's what you do, you are a masochist. You are begging to get wrecked. Just hands down, you're begging to get wrecked. You know why I could say that with confidence? Because analysts, for the most part, who talk in the media are misleading you and misinforming you on purpose. That is part of their job when they talk to you in the media. They get it through media training. Literally. They're chosen to talk into the media by their companies, unless they run small little companies themselves, in which case they've chosen themselves to talk to the media. Not every analyst likes to talk to the media. Most of them do work internally at companies that people look at, and they pass on information to the next person who does whatever they have to do with it. And eventually their shareholders decide what to do with that information. And yes, it is shocking if you don't know the system, how young and inexperienced and clueless so-called analysts can be in the financial industry and inform people who are way more senior than them in time, but not necessarily in expertise, because they've just gone through the system, which does not really judge people based on merit. A lot of it is luck. A lot of it is timing based on luck, like where you happen to be at a certain time. A lot of it is who you know. Some of it's who you're related to, which is even worse. That's just nepotism, right? Some of it is straight up corruption. That's terrible. And some of it's worse than that. But even at the cleanest, squeakiest cleaning level, there's a lot of incompetence. Like very senior type work handed to people who literally just fell off the train out of college, like yesterday. And this is their first job. And here's a $200 million portfolio. Go manage it. Go figure it out. They don't even know what that means. They don't even know what they're supposed to do with it. They're told to manage funds for wealthy clients or whatever. They don't even know what they're looking at. They have no idea what the companies are. They have no idea. They're doing research. They're reading stuff about the companies, and somehow in 24 to 48 hours are supposed to pretend they're experts. Now, listen, I've done that trick too. Way back in the day, right? Because we were in a nascent industry, the internet marketing industry and the internet industry in general. So if you wanted to be an expert on something, all you had to know was like read the top, 5 to 10 trade magazines at the time in any given industry on any given day or week, and memorize as many of the names as you could of the significant names that kept appearing in most of the articles. And then remember the second and third tier names that worked for them that appeared in the articles. Contact as many of them as possible. Suddenly you're the expert because you know who, and you know who, and you know who. And I can tell you in a very short time, I was legitimately considered the expert because I did know many, many, many thousands of people and still do. That's one of the ways that I built my network of contacts, especially back in those days before there was like LinkedIn and stuff, by just connecting people, right? And knowing everybody. Now, why am I talking about this during a Bitcoin crypto video? It's to remind you that this industry is still so new that there's still huge opportunity for builders, for creators, for connectors, for investors, and yes, even for traders. But the information you use for any of those things differs from role to role. The information that's most important to you differs from role to role. The two most similar are investors and traders, but the thing is, investors usually have a much snobbier attitude than they ought to. They look down on traders a lot of the time, which I find hilarious. Not everybody, yeah, like maybe not even the majority, but like there is a significant portion of the investor world that looks down on traders as gamblers and degens. Well, that's for a reason. Most traders who are retail traders are gamblers and degens, and even a lot of professional traders are, when they don't use the leading information. When they use lagging information based on price, for example, which is what most traders use, including professionals. Not what I would call professionals, but what they are called professionals, right? They use garbage information based on price. If you go to, like, there's tons of hedge funds, real hedge funds with many, many millions of dollars under management, sometimes billions of dollars under management. You know how many of them go, like, get wrecked every day on trades? It happens constantly. Right? We look at the crypto liquidation maps kind of for fun, basically every day over at Alpha Trading. And we see who's getting wrecked. Yeah, we look at the Glassdoor or whatever, not Glassdoor, what's it called? I always forget the name of that site. Doesn't matter. Glassdoor. Glassdoor is like a job site or something. But CoinGlass. We look at CoinGlass. We see how many people are getting wrecked. It's insane. And they're getting wrecked because they're using lagging information based on price. That's why it's lagging. Price is lagging. Price is the result of the volatility moving the returns up or down. Price follows the returns. It does not lead the returns. Returns are leading the price. Price follows the returns. Literally, the returns lead the price. The returns are leading information. The standard deviation of returns, which is volatility, is leading information. The volatility and its correlation, that creates the price, right? When it moves the returns one way or the other. Same thing with entropy, by the way. Entropy moves the price, you can say. Entropy and its correlation, that's leading information. Just like the volatility is. Everything else that we use at Alpha Trading that's of significance is based on the returns. There are a few tools that we have because people from the traditional world just love them as crutches or I don't know what. There are a few tools that we have that we actually built that are kind of based on price, sort of. But even those tools, we wrap with standard deviation wrappers, proper standard deviation wrappers based on the returns and things like that. Like we don't just use, we would never use pure price-based tools as the entire tool, and let alone as a secondary tool or even a primary. Clearly not a primary tool, but not even as a secondary tool. If anything, they're auxiliary tools used for confirmation. Okay, so they're not primary, they're not tertiary, they're not primary, they're not secondary, they're not tertiary. Meaning they're not level 1, level 2, level 3 tools. They're like level 4, like down on the rung, not level 4 high, level 4 down. Used for confirmation only. That's it. Okay. And as time goes by, we even, frankly, we use those less. None of the founders really use those tools. Yes, there were some that at the very beginning of when we launched alpha trading that I still found super useful, and they still are kind of, but there's no need for them. If you're in the alpha trading community, I'll tell you what those are. But on this video, it's moot. I'm not going to get anything out of it. But anyway, keep in mind, bull run on crypto, it's still very much in effect. It is still very much happening, if you want to call it a bull run. But it doesn't mean anything, because you don't trade, if you're a trader, you don't trade the bull run as one thing. If you're a proper trader, you're getting into trades and out of trades on a regular basis, right? You're entering trades and taking your profit when you hit your target. Why? So you can enter the next trade and hit your target. So you can enter the next trade and hit your target. So you can enter the next trade and hit your target. That's why. That's literally why. You don't want to get stuck swing trading something so volatile. Look at Litecoin. Litecoin yesterday had like a low, I think, of around $106, almost $107. Had a high before that of 110 and change, almost 110 and a half, a bit more. It went from the low, it went from that high down to that low, back up to that high, like 110, 20, 100, whatever it was, and is now back down at 106 and 20 cents. So it's just been literally going like this. Okay. Those are like 2% moves. How much is to the downside? 3.2% to the downside, 3.25% to the downside, and like 3.15 to the upside. And it did that like 1, 2, 3, 4, 5, 6, 7, 8. In the last 24 hours, it did like 8 times on like the 15-minute candles. You could watch it. That if you literally got all those trades, you made 24% on Litecoin without any leverage in a day. Did you like, even if you only got like half of that, if you got 12% on an asset in a day, on an asset that only moved back and forth 3.25% back and forth, it was just doing this all day on a bunch of little trending moves, but it was ranging relatively, right? Between the bottom side, 68.3 on the daily, on the normal, on the Laplace distribution, and the top side, it was basically at these 4-hour normal distributions and above this weekly line, just going back and forth, trending moves, but ranging within a certain area. %, on 8 trades. But you don't need to be, you don't need to pretend like you're a bot trading 1,000 trades a second or a million. That's not even what bots do, like high frequency trading firms. They trade millions of trades per second. You can't do that. So instead of you trying to trade like a high frequency trading bot, oh, I'm going to get as many trades as I can every second, every day. I have to trade everything where I miss every opportunity. No. You're a human. And if you don't have access to the HFT bots, if you're not running an HFT bot, you're not working on one of them as an employee of the companies that own them, like the HFT firms or the big quant shops that build them for themselves or for clients, like HFT firms, then trade at human speed. That's the beauty and the power of our tools. Again, if you only got half of Litecoin's move yesterday, just half, up and down, up and down, up and down, as a trader, you would have netted 12% easy, without any leverage. Why do you need more than 12% in a day? If you have a normal financial situation. If you don't have a normal financial situation, trading is usually for people who have some means. Or for people who ran out of means for whatever reason, but are really good at trading, but external forces outside of trading ruined them, and then that's what they have left to work with. So that's okay, because they know that they can make money trading. But statistically, that's not you. Statistically, you're going to lose your money trading. I'm telling you. If you don't know how to trade the VEPs, if you're using lagging information, you're going to lose your money trading. You're going to take an over-leveraged position at some point, and it's going to help you get wrecked. And you're going to get that liquidation letter, and you're going to lose all the capital in your trading account, and it's going to suck. So don't do it. Now, I'm not saying don't trade ever. Trade if you want to. You're risking your money. But if you're going to risk your money, at least be educated. Like, at least know what you're doing. And saying, oh, I took this trading course from this YouTube Jimmy. No. If they taught you to trade with EMAs, RSIs, stochastics, order boxes, channels, flags, patterns, any of that garbage, Fibonacci's, anything, any of the classic TA tools, you didn't learn shit. Pardon my French, but it's garbage information. It is garbage. It's provably garbage. We show it demonstrably on our live streams every so often, whenever we have the occasion to compare some random TA tool against any of ours. It's demonstrably garbage. Even the TA teachers will tell you themselves, the classic voodoo TA teachers will tell you, this tool fails about 70% of the time. If your tool fails 70% of the time, why are you using it? It's garbage. If something fails more than half the time, of course, it's immediately garbage. You should discard it immediately, or you should use it at best as a counter trading device because it's always wrong, or it's wrong most of the time. But if you can't reliably know when it's wrong and when it's right, because it's not predictive, based on lagging information, it cannot be predictive, you shouldn't use it either. Even if it was right 70% of the time. 70% of the time is a horribly low number of times to be correct. Like, I mean, okay, it's better than one standard deviation. But if your tool isn't better than that, if your tool is wrong 3 out of 10 times, and you don't know which ones it is likely to be wrong on, you shouldn't be using it. Anyway, I don't want to get too long-winded here. I've already been diatribing a lot for a while now. If you want to hear me talk more, say so. Otherwise, I'm going to start wrapping this up here. Right now, I'm just going to give you a quick, just a quick scope. Bitcoin on the day. Wow, Litecoin on the day. Looking nice. Looking nice with some action to the downside for now on Litecoin, right? The returns are going down, so price action dropping. Bitcoin also dropping nicely on the day. It got to that power mean, that 30 power mean on the daily. Spiked up above it. Yesterday it hit the power mean and managed to close the day basically at it beneath that 68.3 Laplace distribution band. Today it got above the power mean, ran up close to the 68.3 Laplace distribution band, got rejected, and from just above the power mean just started tumbling back down and is now below the 68.3 Laplace band to the downside. And that's okay. This is just a nice little early daily dip. The asset is still in mean reversion to the 3012 RMLR, which is currently at 110.1K. And after today, that sucker is going to be rising nicely for the coming few weeks. And sometime around middle of January, it looks like it's going to have a peak. Again, the price numbers change constantly on the RMLR. We don't care about the price on the RMLR. We care about the direction of the future RMLR, which it predicts extremely accurately. So today's prediction on the RMLR is that the 3012 RMLR dips today, and it is. And anyway, so 3 weeks from now, like January 16th, at the moment, the high of the rise on that RMLR is around 124. Like a week ago, it was like 130. I was telling you guys, look for that number to change. Could it rise? Could it go down? Yes. So everyone's saying, oh, it's going to be 150K by the end of the year. There's a lot of talk about that. Even this month, I remember a week and a half ago, one of the larger YouTube channels about crypto, who frankly has a very great way of communicating in a very passionate way to inform people to not miss the boat and to learn and study and to learn which cryptos are worth putting any, like, you know, your $5 in between the mattresses kind of money into crypto, just so you have some, just so you have a little bit, right? He's very good at communicating that. I don't want to give too much information about it. Like, that would be TMI, if you will. But he's a great communicator. But I don't want to say which channel it is. But even he will report on stories where you'll be like, analysts are predicting price is going to be 150K, and everybody's saying price is going to be 150K by the end of the year. No, not everybody's saying that. I'm certainly not saying that. I'm saying there's a possibility, there's a probability that by the end of the year, the asset could mean revert to the RMLR, the 3012 RMLR, which would be at around 115K and a little bit of change if it does it a couple days before that. But there's no guarantee that'll happen. Yes, can it make an explosive move in a couple of days? Sure, absolutely. Can it move from 98K to 115K in a couple of days? Absolutely. It could also move 12K today and close the mean reversion today and then come right tumbling right back down. But it doesn't have to go up. Right? Right now, look. Right now, the asset is moving. It's within the 68.3% and 95.5% Laplace distributions to the downside on the projection boss, on the daily, from the drop we had that, you know, on the projection boss that's set on the Wednesday the 18th, when we started seeing that nice little move to the downside last week. Right? And it kept falling very early. I'll show you. Where am I even? Look, here's the drop we had on the 18th of December. Okay, 5% move. So that's where that arc. Okay, so that's a reversal candle, because it's started at or above, right? In this case, at the high of the last candle close, and the body is below the bottom of the last candle open or close, right? Or yeah, open. So this is a proper reversal candle. Look at this distribution arc. That's the 95.5% probability arc of Laplace distribution on this distribution pattern. Okay, here, there's the mean. This white line going there. There's your 68.3% Laplace distribution arc. There's the 95.5. That is the 3012 RMLR right there at 110,000 and change right now. Okay, that's 110 and change. Now, if that number goes up, as it should, to this peak up here on the 16th of January or something like that, yep, Thursday, January 16th, look where that number is, right? It'll be around 124,000, 124.5. But these angles and the steepness of them, they change. Now, this line going down was predicted to go down. The exact angle of it going down doesn't matter if yesterday it was predicting it to go like this or like this or like that. We don't care about that. We care about the direction predictability of the RMLR. We care to know that once you have a situation like this, where the asset was below this third band of that 3012 RMLR, once it stopped touching it, in all probability, the asset is in mean reversion to that RMLR, which at the time was around here, around 118, 120 and rising, right? And that RMLR rose very nicely to about 124K on the 21st of December, when price action was already falling down. So it could have technically, if it had completed the mean reversion, it would have gone up to there on that day. But it didn't. And that's okay. We don't care about the price of the RMLR. We care about the direction of the RMLR. And we care about knowing when it's in distribution away from an RMLR, like here. It's moving away from this RMLR. It's also moving away from this RMLR. And when it's in mean reversion, here we know it's beginning to mean revert. Even if the price goes down, how many times have I said it can mean revert to this RMLR by going sideways like this and dropping slowly. And then when this line up here starts to dip into the future, right? Like if it does something like this here, make it, I'll draw silly lines for you, okay? All right, so if it goes like this, if the price action goes like this yellow line, and then like that a bit, right? It will, and this thing goes like this, for whatever reason, this also goes down, and then at some point in the future, drops, right? There could be spikes along the way. There could be, it could do that as well. It could be, whatever. Like you could have, okay, it moves certain ways, right? This thing, because the direction, again, the slope of the RMLR can be different, right? We don't care about if the slope changes on any given day. We care that the direction is correct. So this thing, I'll move it over even more. This RMLR could eventually walk into it. The price action could walk into the RMLR sideways down here somewhere. in the 84K region, for example. I mean, this is a random squiggly. It's obviously not predictive in any way. It could happen higher, it could happen lower, it could happen there. If it happens there, boy, that would be funny. All right, but so they're both going down, and it will eventually run into it going down. There's no reason that that can't happen. That absolutely can happen. We see it happen all the time. Don't believe me. Look, here it's happening. Here, it's literally happening. Oh, yeah, it happened. Here it's happening again. Right? But this tool lets us know when an asset has maxed out its distribution, like here, and when it's going to become an asset that's in mean reversion, which it confirmed here. And then it started to mean revert, and boom, one mean reversion completed. And the next thing, boom, mean reversion completed. And just to double check, it completed again right here on both of them. And then here, right after the mean reversion completion, right, it did the same thing where it went below this third band to the downside of this 3012 RMLR. So a couple candles after it stopped hitting that, right here on this Saturday, the 14th of December, I said that is when we will likely see it confirm that mean reversion is in progress in all probability. Now, is there a probability that it could skip 3, 4, 5 days and then hit that band again? Yes, there's a probability it can happen. It's just very, very small. So if it were to approach this level, you would take your profits if you're on a short, because it's not likely to hit it. And even if it does, it'll just spike through and bounce up. And if it does stay down below it, as it does if you set it on different settings and whatever, it does happen sometimes, but very rarely, well then, you just enter more different trades, all right? You reposition your asset. But that would take the profit here. If it were to drop from here to down here, you would still take your profit before it hits the line. And who cares if it drops below the line and it continues dropping? You would just re-enter a new trade if you see suddenly the information is all switching up on you. But that didn't happen, did it? No. Most of the time that doesn't happen, does it? No, it doesn't. Most of the time it follows the majority of the probabilities. We're talking like 99.7% of the probability is that it will touch this line up here, right? There's only a 0.3% that it won't touch this line before touching this line down, currently down here at 75K. And moving up to around a high of like 89K by mid-January. So 99.7% or higher probability that it will touch this line currently at 110K and moving upwards, climbing upwards generally. Yes, there are down days along the way on the RMLR, but generally it's moving upwards. Most of the time it will move, it will hit this line before hitting the band, the third standard deviation band of that line. This is the third standard deviation band of this line. All right, notice they both have the same lengths. They both go to the same point in the future. So that's a massive probability information in your favor if you know how to use this tool. Because you know the odds are it's going to run up to here before it goes down to there. But that doesn't mean it has to 100%. It just means massive probability advantage to the upside or to this line before this line. So it can go, again, it can go sideways like this, come real close to this line down here, and then shoot up and go there. It can do that. Or it can just keep going sideways and drop a little until this thing also starts to drop a little in the future, like I said, like I showed you. So don't get caught. RMLR, good question, O'Coop. RMLR is the reverse mean of log returns. Remember, I've been speaking to you about returns. Everything we do is about the returns and the mean of returns, the standard deviation of returns. Returns are your returns on investment, the ROI. These lines, these are the reverse means of log returns. And myself and other co-founders, the other co-founders at Alpha Trading, after our math genius showed us his reverse mean of log returns indicator, we started test piloting this thing as we do. And I figured out that it is predictive in some ways, that it shows us the future direction of the RMLR. I figured it out literally with the old paintbrush tool, with the magic squigglies. That's right, I used the magic squigglies. But I didn't just use it to draw silly nonsense. No, I used it to calculate, or not calculate, I used it to predict the future direction of the RMLR. And it's correct. And it's correct whether I use it on this length, and it's correct whether I use it on this length, and it's correct whether I use it on any other length that I use it on practically. Because it's that good. Because patterns break and maths don't. That's why. That's why we don't look for patterns, okay? We look for maths. Like here, when it goes below this third band, that's not a pattern that I'm looking at. I don't care about, that pattern happened before. Maybe the pattern happened before. I don't care. I care about the probability that it went below this probability line, this distribution line, the standard deviation line. Once it's gone below the standard deviation line and comes back above it, there is a more than 99.7% probability it is going to touch this line at some point in the future before it hits the line below again. Right? This line is not likely to get touched by the asset again until it hits the actual RMLR itself. It is going to complete the mean reversion to the RMLR, just like it completes the mean reversion to this power mean. This is a power mean. What does the power mean? Power mean is a well-calculated mean of returns. This is not a reverse mean. This is the mean, the 30 length mean, the power mean. Why do you call it a power mean? We call them power means because they're bullies. They're very strong. Look, runs up to it, rejection. Runs up to it, rejection. Runs up right past it, rejection. Let me make it clearer for you. A couple weeks ago, it was riding high above the power mean. Fell down to it, did not go through, bears got rejected, bulls bounced it back up, right? In other words, shorts got rejected. They took their profit here. The smart ones did. Most of them just got wrecked on the bounce back up because they thought, we're going to dump more. They didn't see this line, of course, because traditional TA does not see these lines. But the bots do. The bots trade these lines. They don't look at them on fancy graphs like we have, or charts, sorry. But they use these same numbers. It's the same maths. Here, the next day, look, went right below the power mean, got rejected there, bounced right back up. The next day, again, down to the power mean, got rejected, bounced right back up. Right? And here, when it closed below the power mean, when it finally fell through it, well, look, it couldn't get above it. And now I tried again, got to the power mean, got rejected. Got to the power mean, got rejected, got rejected, got rejected. Power means are bullies. They're very strong. So yes, if an asset closes above or below it on a move, that's great. It's indicating a very high probability of a change in direction. Does it happen that they flip back and forth sometimes for a good number of days? Yeah, absolutely, it happens. Does it happen all the time that happens and is very confusing? No, here's an example. Here's an example. Look, it's very clear. Look, it got rejected. It fell under the power mean here, closed under the power mean. So it was indicating a down day would be probably next. And look, like, because negative returns beget negative returns. And look, it was a very small down day. Okay? It was, you can see there, 0.5% to the downside, including the wick was obviously a lot more. But then the next day, on other information, right, including the RMLR predicting to the upside, it went above the power mean and closed above it and then stayed above it for that whole duration. And look, even here, 2 days after, when it spiked beneath the power mean, it got rejected on the downside. And the next day got rejected on the downside, right? At the power mean, and just kept riding high above it. Same here, right below it, and right before it, right? It fell down to the power mean, got rejected, stayed above. Here to the power mean, got rejected, stayed above. Here to the power mean, got rejected, stayed above. Here to the power mean, where it started, and just moved up. Power means are very powerful. Anyway, guys, you're welcome. I'm very glad that was informative. If you like this video, guys, do me the YouTube favor and like it and stuff. Also, if you want these tools, let me show you something. You can get these tools right here, which is the fundamental basic training wheels, if you will. These are the basic tools you need to learn to trade this way. We give these away for free. These are our tools. We give them away for free. Okay, you come into our Discord, go to alphatraడింghq.com/Discord. You will learn how to trade volatility and the Pearson correlation together as one unit. These act together as one tool, right? And these are just 3 different settings of them, 3 different lengths of them, so you can get good reads of what's happening with the volatility. This tells you the direction. This tells you the direction. This tells you the direction of the price action, what it will probably be. Okay, that tells you the direction. This shows you the returns oscillator. This is an alpha laser returns. It's a returns oscillator. It also has divergences in it built in. You can use it automatically if you're learning how to use divergence. It's a divergence between the returns and the price. That's the only real divergence you need to learn on first. There's also a divergence of entropy, but this is the main one. It also has a price predictor built into it. It shows you the direction of price predictor. And it is incredibly accurate. By the way, what is the price predictor saying at the moment? It's saying that despite the returns dropping at the moment, we're still seeing a predictor going to the downside, but we're still seeing the predictor saying up, but it can obviously change throughout a daily candle, which is quite a lot of information. So a lot of changes happen on daily. Right? And it is a very, very powerful indicator. So it's got divergences built in. It's got a predictor built in. And then there's this tool right here, the alpha volatility quality, which tells you very nicely when to get in to a move and when to stay into it and when to get out. So, for example, here, get into the long, here, get out. Okay, it's actually very useful for scalping, but it's not a tool that we say, oh, this will get you every single candle. No, this is to know when to generally get into the move and generally get out, so that you end up your trade in profit. Okay. Will it sometimes? It's not late. It's not lagging. It's telling you the quality of the volatility. So it is leading information. And depending on your settings, will be more sensitive or less sensitive. But generally speaking, if you're looking to do conservative, safe kind of trading, it's very powerful. Yeah, dump everything now, right? You say that as it's pumping on the 15-minute. Sure. That's why I don't give price predictions like to what you should do right now is buy. Like, I'll never do that. Okay. Do I think long-term as an investment, it's worth investing in stuff? Yeah, in general, people who invest money and don't have to spend that money and can just hold on to it as an investment for many years, they generally end up doing well if they have either a diversified portfolio or they've invested in strong assets that do well over time. There's the mindset of like, oh, you should only invest in one thing, and if you invest in your dreams, then you'll make your dreams happen. If you invest in someone else's dreams, you're just making their dreams happen. Okay. But maybe your dream is to invest in many things. So then that whole philosophy goes out the window. So don't pay attention to silly nonsense. Do what you think is best for you. But at least know your probabilities. And these tools show you literally your probabilities. If you don't know your and you can get all this for free, just come into our Discord. Like I said, alphatraడింghq.com/Discord. We do live streams. in the Discord, usually Monday through Friday. We've been recently adding weekends as well, but normally we do Monday through Friday, 11 a.m. U.S. Eastern Time is when we start them. We used to start them at 9 a.m. during pre-market, but now they're 11. There you go. That's how that is. And we are adding, I think, more days per week. We're going to probably do Saturday and Sunday pretty regularly. And we're just keeping the live streams to like under an hour. Shorter than this. Wow, this one's actually been more than an hour. I got to go. All right, folks. So you just come on into the Discord, get your free tools. You do that by going to the request support channel, creating a ticket, and asking for your free tools. And obviously, you have to give us your TradingView username because these tools are on TradingView, right? And in order to use TradingView, you have to have a TradingView account. You can have we have a hack for people. It's not a hack, but we have a way that you can use it with the free tools, kind of. But they've been restricting their free tools so much. If you're a serious trader, you're going to have a paid account, at least the cheapest version of a trade account in TradingView, probably, right? Because you want to be able to have multiple charts and indicators. If you're not a serious trader and you want to be, you're probably going to use TradingView. I don't know. But if you do, I mean, it is the world's most popular charting site. That's why we put our tools there. But yeah, you can get these tools for free. Come and learn. And it's free to learn. We'll give you free access to all the information you need to learn how to use these tools. You get free access to the live streams. You can participate by text. You can participate by voice. What other live stream about crypto trading lets you actually jump into the action by voice and participate in the live stream, speak with the hosts of the live stream? What is there any other? I don't even know. Like on a regular daily basis? I don't even know. I don't think so. We have a tiny following, like tiny. If you're seeing my videos, no, they're nothing like the EMA. Oh, Coop, they are nothing like the EMA, bro. We can put them side by side. You'll see for yourself. EMA is the exponential moving average of price, which means it's telling you is what the price was. Who cares what the price was? Wouldn't you rather know where the price is going? Wouldn't you rather know where the returns are going so that you know where the price is going to follow? Our tools are nothing like. I know they may, to the untrained eye, some things might look similar, but most of it actually, to most people, looks like, wait, what is this? Especially when we pull up a chart that looks, like this, right? People are like, what is this information? Or pull up a chart like this, right? Like, what is all this stuff? This is nonsense. It's not nonsense. This is very powerful leading information, all of it, okay? And I didn't manually insert these horizontal lines, right? These are calculated automatically by mathematics and updated constantly automatically, right? Or when I pull up a chart like this, oh, what is that? I don't understand this. Yeah, because you just haven't learned it yet, but you can learn it. You can even learn this for free, by the way. By the way, even if you learn our free tools, like once you use our free tools, they're yours to keep as long as you're in a Discord. Like as long as you don't permanently quit our Discord, they're yours to keep, right? It's yours to use for free. And you can try our pro tools, like these premium ones, right? And all the other premium ones that we have. We have many. We have like more than 40 tools. You can try them completely free. You don't have to. Some people just want to get them right away. So just let me buy them right away. They just come into the Discord. They just demand to buy them. Okay. Right. But like I said, we're a tiny community compared to any other trading community, crypto community. We're tiny because most people don't want to learn. They just want signals. We don't give signals. Even though if you listen to our live streams, you'll hear information that's telling you very clearly what the probabilities are. And very often, I'm not going to say that the directions are predicted in the thumbnail titles, but they are. Just say that. But more importantly, because we don't give signals for a reason. We're not here to give you signals. We're here to teach how to read this information and how to make the most of it, right? And when I say we, I mean Alpha Trading, right? It's not me. I'm not alpha trading all by myself, right? There's a bunch of there's 6 co-founders, and there's a bunch of people in the community, and we're here. The co-founders created alpha trading to teach people how to read this. Why? Why do we want to teach people how to read this? For free, by the way. We're not shilling a course at you. Why are we teaching you to read this for free? Because we're sick of people shilling garbage courses at you. We're sick of seeing people getting wrecked and paying money for the privilege of doing so. So why do we give people free tools to learn the basics of how to do this? To see for themselves, completely for free, that it works. Because we're sick of seeing people getting wrecked using garbage information. So next time you go onto a crypto trading video and you see these guys hawking courses at you to learn how to trade with their garbage information, think about the fact that we give you our tool. Oh, thank you for your sub. I appreciate that. Think about the fact that we give you the information completely for free. And we will answer your questions day in and day out until the cows come home, until you learn this stuff. And yes, if you're one of those people who wants private tutoring, we do offer that. Myself and Bilbo, we do the tutoring, right? Only co-founders are qualified to do the tutoring. There's only 6 of us. Only 6 of us are qualified to even do it. And only 2 of us really actually do it because there's not that many people that even want the tutoring, which is fine by us. I mean, frankly, we don't really understand. Like, if you want the tutoring, you get a whole year of our Pro Trader subscription as part of the package. It's an insane deal. But anyway, I'm not here to hawk that. I'm just telling you, there is private tutoring available for people who want it. But we'd rather you just learn this stuff for free. That's why we created our community. Like, yeah, we're happy to tutor you, but we're not in the business of tutoring. We're in the business of trading, right? So yes, we will gladly do the tutoring. We will make time for you, and we hope that you take it seriously because what we're telling you is very valuable information. But generally speaking, we don't care if you sign up for that or not, because like I said, we're in the business of actually just trading with these tools and our methods. If we didn't use these tools to trade, we would not release them to anyone. Not our free ones, not our paid ones, none of them. There's a reason we use these tools. They work. There's a reason we don't use other tools. They don't work. They're not reliable. Show me more reliable tools than this, and I will use them, even if we don't make them. Show me more reliable tools. Come and show us in the Discord. We will, believe me, we'll look at it. We have compared zillions of tools. That's a technical number. Zillions of tools from other people claiming, oh, this is a better tool. Really? Show us. And then people saying, oh, I came into your Discord and I back tested your tools. Within like a 24-hour period, they claim to have disproven that our tools work. First of all, you don't back test leading information tools on TradingView. If you want, what you do is you use the rewind. Use this little tool right here, the rewind button. And then you can go see for yourself in real time how the indicators, right, or in sped up time, how the indicators predicted accurately what was going to happen. And you will see the majority of the time, the vast, overwhelming majority of the time, it's correct. Yeah, see ya. Happy holidays. Ho, ho, ho. All right, bro. Happy New Year and all that stuff, too. May 2025 be even more prosperous than 2024. Hope to see you again in the next video. Anyway, I'm going to get going. You guys stay safe, be well, happy trading. Catch you in the next video. And yeah, for now, that's it. Cheers. Should I do the hand thing over the camera? I'm not into that, but yeah. There you go. We'll do that like that. I'll pretend like I did like the cool YouTubers, but I'm not a cool YouTuber. All right, see you guys. Cheers.